Canberra for Cam's Mortgage Minute on Tuesday, April 23rd. Hey, this Cam's Mortgage Minute I've titled "The Taxman Cometh," and believe you me, he's coming. And he's coming for those who are not trying to pay their fair share of taxes in the estimation of the government. In the words of our finance minister, those are tax cheats, and he's looking for people that are using all the loopholes, and he's looking to close them. One sector in particular they're looking at is the condominium market, because there's a lot of flipping going on in the condominium market, and the government's giving it far more scrutiny. In particular, what they're trying to see is when something is a capital gain versus an income, because they're taxed in totally different rules. And in particular, with respect to the assignment clauses, I don't know if you know it or not, but sometimes when you're buying a property, or especially a condominium project that's yet to be finished, there's assignment clauses put in where folks say, okay, I can assign this contract to anybody, and prior to the building even being built, quite often, that is assigned to somebody else, ultimately, who winds up living there. And the person who assigned it assigns it at a profit and makes some money. And with a lot of folks, they've been considering this as personal residence exempt, and they've been trying to get away with it different ways, saying, well, really, I was intending to live there all along, and that's, you know what, I shouldn't really have to pay any gain on this. But the government's saying, no, folks, you really weren't intending to live there all along, because if you were, why would you be putting an assignment clause in? The other thing is, the key difference they're looking at is when something is meant as a business versus as an investment. And there's a really real difference between these two. And how they look at it this way is they treat income and capital as different. So income and capital is well, if I give you an analogy, it's as simple as the difference between a tree and the fruit it bears. So think of the tree as capital, and it produces a fruit, and the income is the profit that is derived when the fruit is sold. If your condo is that tree, and your rental income is the fruit, and you make a profit from that rental income, then that's taxed at full income. You eventually sell the tree for more money, and that's just capital gain, taxed at basically 50% rate. If your entire business is just trading trees, essentially, and not ever producing any fruit, so you're not looking to harvest anything, you're just going to keep flipping, that's business income. And the Income Tax Act asks, what was your intention when you bought the condo, which is what we just talked about a little while ago. If your intention was merely to flip it, then it's going to be pretty hard to prove to anybody that it was going to be your principal residence. And this is what you were looking to do, and it wasn't an investment, a long-term one you were hoping to make rent from or whatever else. So, I'm not a tax expert, but I suggest that if you're going to be investing in these sorts of properties, you've got to get a good advice from a tax accountant. My own personal feelings on taxation are simply this. I'm more than happy to pay my fair share, and you know, we all have a sliding scale of what we consider to be fair. But I would expect that everybody around should be paying their fair share as well. You know what, there's a lot of people who are proud of the fact that they get to avoid paying taxes, and they basically beat the tax system, and they basically beat that. Well, that's one of the reasons we run a deficit, other than the fact that the government mismanages a lot of money. So, and I'm not fond of turning it over to them either. But the bottom line is, if I'm using the roads and other people are using the roads, but there's those who are out there using these hospitals, roads, and services but not paying for them, that's not particularly fair. Because when you cheat the taxman, really you're cheating your fellow taxpayers, because that's who funds the government. There is no mystery boogeyman that runs all this, and there's no money that's generated out of thin air. It's collected from you and me out there as taxpayers. And I would expect that everybody should be paying their fair share. Government waste, hey, like I said, I'm not a believer of it. I think government should run very efficiently, and that's one of the reasons we hearken not giving them money, because we go, wow, they don't manage it well. But the flip side of that can't be that we're just not going to pay them, so our fellow taxpayers wind up eating the bill. Anyway, it's just my own personal opinion. But bottom line is, if you're one of those folks who is buying condos, flipping condos, doing different things, and you have done them in the past, I would take a good hard look at what you've done, or sit down with an accountant, because the taxman's coming. They are starting to audit these files. They've hired more collectors to go through this. Even in the last federal budget announcement, Jim Flaherty announced that they're going to be paying a fee, basically a commission, to people who turn over people that they suspect of tax evasion or tax fraud or cheating or whatever else. My personal take on that, again, is it's not exactly a great idea, because now sometimes the people that they're going to be reporting aren't going to necessarily be people who've done any wrong. Somebody could be holding a grudge against someone else and whatever else. I think what the government should be focused on is doing a better job of doing what they can to discover who's not paying. And really, in this automated day and age when we have information for everything, I don't see why that's not possible. It's quite frankly can work readily well. So if you are an investor looking to invest in condominiums and that alike, talk to a good tax accountant, structure it properly right from the outset. It's worth the investment so you don't have grief later. If you have recently sold some properties and have reported the income or the gain, or you've been trying to claim it as tax-free, double check with an accountant, because you don't want these fellows at CRA coming back to look at you, because not only will they collect the money, but they will impose penalties and everything else. And I'll tell you one thing, you can't fight CRA. You can try, but you'll be there a long time. And they've got unlimited resources to fight you with, which are your money. That's right, they use your tax dollars to do it. Anyway, it's been Cam for Cam's Mortgage Minute, and I will see you tomorrow.